Good morning, investors and traders. In today's segment, I'll be answering a very important question, and that is Bitcoin price in danger? So let's have a much deeper discussion around this topic and then see where are those important buy and sell zones, and more importantly, if we really need to be worried about with the Bitcoin price. Before we do that, as always, it is important for me to go through this brief disclaimer, which is right in front of you. So, first of all, on the fundamental side of things, what we really look at is, some positive developments, such as Goldman Sachs, the biggest bank on the Wall Street, is going to offer Bitcoin futures very, very soon. On top of that, a recent survey also shows that 1 in 6 hedge funds plan to invest more than 10% in cryptos. Third, which is quite important as well in terms of Bitcoin price, is that Wall Street asked if Bitcoin can ever replace crypto fiat currencies. So there is this question which is really sort of going on Wall Street, if given what happened with El Salvador, if Bitcoin can really replace those fiat currencies. I mean, my answer to that is, well, not really, but in certain places maybe we could see something along those lines. But more importantly, when it really comes to Bitcoin price, is that hedge funds now are very much ready to uh, to to uh, uh, to invest 10% of their portfolio in Bitcoin. And given the fact the Bitcoin price has fallen so much, so that is something very, very positive. And on the regulation side, the SEC has delayed the approval of VanEck's Bitcoin ETF, and that isn't really that positive. And speaking of not being positive, China is kicking out more than half of the world's Bitcoin miners, and a whole lot of them could be headed to Texas now. CNBC sort of reported this report, while Elon Musk continues to flip flop on Bitcoin, that whether he wants to adopt Bitcoin or not. Now, with all of that in mind, we are going to perform a much deeper sort of a price analysis and then see where those important support and where your buy and your sell zones are. Now, of course, guys, if you like the content of what we are discussing in terms of fundamentals and of course in terms of technicals, please do give us a thumbs up, because that really sort of help us in terms of Google algorithm. And remember, markets do change constantly, and that means you need to be aware of those changes. And for you to do that, you need to subscribe to the channel so that you can get that new video straight to your inbox in terms of a notification, especially if you click that bell icon. Now, when we look at the daily price chart, we have the two different indicators. Number one, we have a moving averages, which are in the form of pink, yellow, and green. And on top of that, we have this Bollinger Band, which is shown by the blue line. Now, the concept of Bollinger Band to begin with is as follows. So every time the price sort of pierces the lower level of the Bollinger Band, it reverses back towards its mean like it did over here. And then when the price pierces the upper level of the Bollinger Band, it sort of reverses back towards its mean. And we can see that it happened many times over that period. For example, over here, as you can see, sorry, this gone a little bit too much zoomed in. So let's zoom out and zoom in again. So as you can see, the price pierced the lower level of the Bollinger Band over here, and then it moved back towards its mean, and then it pierced the upper level of the Bollinger Band. It moved back towards its mean. The mean is your 20-day simple moving average. Same thing happened over here. Same thing happened over here. Same thing happened over here, and then more or less open here, and then over here we did see the piercing of that Bollinger Band, and the price started, tried its best to move towards its mean. And when it pierced the upper level of the Bollinger Band, it moved back towards its mean. In fact, now it is about to pierce that lower level of that Bollinger Band. So the concept of the Bollinger Band is that every time it's piercing the upper level of the Bollinger Band, that means prices are overbought. They move towards a mean that is your 20-day simple moving average, and vice versa, meaning whenever it pierces the lower level of the Bollinger Band, like it did over here, it moves back up. And that one of that indication could be coming very, very soon. Now, another important sort of a price level that we need to kind of we need to be aware of, and something that we discussed previously, was this particular support zone. Because when the price did come into this support zone right over here, in our previous analysis, we talked about the possibility of prices moving back up, which they did, and then the price came back into this area, and then we talked about the prices moving back up, which they did again. And now for the third time, the price is coming back into this area of support zone again. But now the probability is that the price may not be able to stay over here. In fact, the price is more likely to come into this area of support, which is that important area where we see this massive rally. So now this particular price is very much likely to come into this area of support. Of course, we will continue to monitor the price action and then see what exactly is going to happen with respect to the price action. But for now, it seems like that this area is the most important area of support. And the reason that I'm keeping, let's change the color of this one into green as well, so just that we have that differentiation in terms of our support zones and in terms of our resistance zone, because our resistance zones are shown by horizontal red lines. And then you can see for us that resistance zone really is right sort of over here. So again, I'm going to change the color of this resistance line to red so that we can differentiate on the time frame over here. So again, to summarize, we are trading below the three important moving averages, which is your 200, 100 and 50-day simple moving average. The price is about to pierce the lower level of the Bollinger Band, which may very well happen over here, and it can push the price back towards the upside, but the chances are that this is happening for the third time for the price to enter into here. It is likely to break more to the downside. This crossover over here, the 50 crossing below the 100-day simple moving 200-day simple moving average, has already happened, and that means more weakness. That's all for now. See you guys next time.